What is going on, investors? Another eventful week in the stock market. Saw a big up day in the NASDAQ yesterday, followed by kind of a sideways down day today. I'm going to talk to you about why I actually think that is a positive sign for the markets and why I could potentially be buying the dip on these stocks that I outlined today. And so I'm going to walk you through about 6, 7, 8 stocks that I am going to likely buy the dip if I haven't bought them already. Let's kick things off. First thing is first, AMD, Advanced Micro Devices. Over the last year, stocks up 81%, but more recently, over the last month, stocks down about 13%. We see here on a price to sales basis, this company traded very comfortably in that 8 to 9 times sales until it kind of like blew up like most of the market did like in the summer of last year. And it's kind of been trending down. Now we're still in an elevated price to sales valuation, but they have bolted on an acquisition or that's pending. And so I do like this company. Now from a chart perspective, I am in love with what I'm seeing here. Okay, this stock bottomed out here right on a trend line that we actually had marked out on this one for a while. It acted as support here, acted as support here. This is back into last year, and it was kind of the launching pad back here when this stock made kind of a monster gap up move. Now, here's the rub. We have almost no price action underneath here. I mean, this thing could free fall down to $58 per share. But that makes me think that this is a very significant level, which we're looking at about $74 per share. Currently, the stock is at about $77 per share. I've been nibbling on this one in my retirement account, where you're only allowed about $6,000 in deposits every year. I've probably bought 3 or 4 shares of this one. I've built up kind of a small position in this one in this $74, $75, $76 range. Now, what I like is we came down here, we touched our major support, and we came all the way back up to what I believe is likely some resistance up here at $80 per share, and it bounced back. That is totally expected. In fact, I think that's kind of a bullish move, especially if we can follow this up with another green candle. If we follow this up with another green candle in the next day or two and get above 80, boy, oh boy, I think we probably have mid 80s to maybe even high 80s back in play on AMD. And now if I'm wrong, this one could break 74 and come way down, and then you're probably averaging into this one. Hopefully that scenario doesn't play out. Such a great company. I doubt it, honestly. Now, the other company should be no surprise. Apple. This is one that I'm already overweight on, so you got to be a little careful about adding shares, but it has pulled back, and when we look at the chart, I think you're going to like it. Over the last year, up 81%, but over the last month, down about 11%. Now, also on Apple, from a price to sales perspective, we are pulling back into a little bit more comfortable price to sales action, which about 7 times it's been as, upwards of 8.5 times sales. We're pulling back into what I perceive kind of a comfortable range. Now, from a chart perspective, this one looking almost identical to AMD. We had this big downtrend, came down here in tag support, which I marked out here at about 116, and it bounced above 119, and here we are sitting right at 119. I'd expect the stock to meet some resistance here. Now, 2 things that can happen again with this. When you see these kind of V formations, notice when stocks, when they bottom out, they create this nice little V down here and they resume an uptrend. I'm not saying that's necessarily going to happen, but if we can follow up tomorrow, that's why I'm not worried about this red candle here. I'm not worried about this at all. In fact, I like this red candle as long as it's not deeper than the one we made here. We have made a higher low here and we started an uptrend. If we can come in tomorrow with a green candle, that would be very bullish. I think we could resume up to 120, 125, 128, maybe even potentially 130 with Apple over the coming weeks. I like this stock anywhere between 116, 120. Now, if I'm wrong here, we break 116 on a big red candle for whatever reason, well, down here at 108, 108's probably in play. That acted as support here for several times, and I like the stock even more down there. Probably be a little bit more aggressive if we happen to tick down into there. Now, next stock, probably the stock I'm most bullish on for the long term is Amazon. For the last year, stock's up 70%, but for the last month, down 7%. Rarely do you get great opportunities to buy Amazon, and you had one just a couple days ago. This thing bottomed out under $3,000 per share. I did nibble on this one. Fractional shares in my son's account. They obviously have, they're very little. They have a long time horizon, so I really like to get shares of that down here. Now, I haven't bought a full share in my retirement account. It's a little difficult when you've got $3,000 share price, but if you don't have a position in Amazon, this could be your opportunity. Again, same thing that we're seeing here, a big bottom out kind of V formation. This one's actually retraced all the way back up to $3,100 per share, and again, met this resistance line that we've had marked in here and then bounced back. Now we're between 3,000 and 3,100. I think as long as you stay above 3,000, and especially if you follow this up with a mild green candle yesterday, it could be the reversal that Amazon shareholders are looking for. Could be a good buy the dip opportunity. Now, next one is actually an ETF. This one is unique to me. I'll explain my situation. I do not invest in individual healthcare companies, mainly because I'm just bad at it. It's something I'm not very good at. So one of the ways I'm getting that is I'm getting exposure through ARC-GEB, which is ARC's Genomic Revolution Multi-Sector ETF. Now, what I would say is maybe if you're underweight healthcare, you have all exposure to tech and GameStop and Plug Power and these crazy high flying stocks, and you want a little healthcare. Well, I think there's better ETFs for that. For my situation, I already have exposure to some of those ETFs. I wanted to get exposure to really speculative healthcare. And so I would say that this genomic ETF, while it does have Teladoc and some other, those companies are still what I would consider somewhat speculative. This has really undercovered kind of, I don't want to say micro cap, but somewhat mid cap healthcare plays in this. And so it's somewhat speculative, which I like, but you got to be careful of your sizing. I wouldn't have a big portfolio of this. So I just wanted to explain that. Over the last year, up 160%, but over the last month, this thing's down 21%. My opinion has created a nice little buying opportunity. Now, what it did here is again, we're seeing this same formation thing bottomed out, and it has created a nice little V formation, which is what you like to see in kind of trend reversals. Now, we have a big, get a big red candle tomorrow or the next day or on Friday. Well, guess what? All bets are off, and maybe the downtrend is still intact. This could be a fake out. That's why you want to be careful when betting on these things. We also have very thin volume in between my ranges here, all the way down to $75 per share, all the way up to about $92 per share. That you see that we tagged it here and retraced a little bit. I would expect this $92 price target to act as resistance. If we were able to break above this, that would be a bullish sign, although our 50-day moving average has rolled over and has turned negative here. So inching into this one, it is a very speculative play. I just want to point that out for me and in my portfolio. I'll let you make the decide if you want to make that decision too. Next is not a speculative stock. Costco, ticker symbol COS. We just did a video on this stock, how I like it at these levels. And you see over the last year, stock's up 5%, not doing a whole lot. But over the last month, rarely do you get Costco at 11% discount. And that's exactly what we're seeing over the last week. This one's made a nice little, boy, it traded way under this 50-day moving average, which is actually pretty rare, and bottomed out here down at right around 305, 307 a share. Now we're back up to 324. I've got a nice trend line here. There's actually it acted as support right here. We're off it a little bit, but acted as resistance here for a long time, right at $320 a share. We're right at 324. So don't feel like if you're in this one, you're kind of, missed the boat here, but we've made higher lows here. This thing looks like it wants to reverse on me. And then what I want to show you is more broadly, when we zoom out this chart, I'm on a daily chart. In fact, I'm going to zoom this out to a monthly chart and kind of show you something a little bit different. Actually, a weekly chart is going to be the better option here. So I'm going to show you this on a weekly chart, and we're rarely, oh man, this one's not showing it to me either. So I'm going to go back to the daily. Sorry, we're doing this live. We're not going to cut any of this out. Daily chart, notice anytime on the daily view that we're below this 50-day moving average, which is this blue line right here, anytime we've been at it or below, the stock has rallied and gone back up. Now we're way below it. So I like Costco at these levels, either fractional shares, full shares, whatever you want to do with this one. Next stock that we're going to buy the dip on, in fact, I did this one multiple times, is Microsoft. So over the last year, stock's up 55%, but over the last month, down 4%. Not a big move, because when we come over here and take a look at the stock chart, we see this one didn't have as big a drawdown as we saw with some of these other stocks, maybe like an Amazon or even like an Apple or certainly some of these other little bit more speculative names. It's held up well. It's held up nicely in here. In fact, it's kind of sideways consolidating. That's why I like like this one, especially down here at the 229, 230 range. We're sitting at 232. I like this one at that range. Now, if I'm wrong, we break this, well, we're coming down here, 215s, 220, 225, somewhere in that range. Probably like it even more, be a little bit more aggressive on this one. Now, I didn't have an individual share exposure to Microsoft, so that's why I probably jumped the gun on this one, but I do like it from that perspective. Now, on to two very, in my opinion, very speculative companies. Now, they have gigantic market caps, but in my opinion, their business model is not as proven as a Microsoft, a Costco, an Amazon. Obviously, there's not very many companies in the world that have that type of track record. So just wanted to say that these are speculative bets, and I would not, and I repeat, not build up large positions in these companies unless you have exposure and major exposure to the home run Hall of Fame winning companies out there like an Amazon, an Apple, Microsoft, on and on and on. Build up a portfolio of solid blue chip stocks, and then you start playing around with the kind of speculative names. Now, I understand a lot of you guys are young investors, and I made the same mistakes when I was young. I played around with the speculative stuff before I started buying the Hall of Fame kind of blue chip stuff. It is that is the completely backwards way to do things, okay? Build up stakes in these big time major companies that prove themselves year after year, month after month, and then come in here and dabble and nibble on these types of companies. Now, Palantir, like their business, probably definitely, I wouldn't say definitely, absolutely overvalued from a market cap perspective, but from a stock chart perspective, I like what I'm seeing here. Okay, we've got a lot of sideways consolidation in here from $22, $23 a share up to $29. We're sitting at $24.50 on this one. Kathy Wood of ARK is just buying the dips on this one. I like what I'm seeing here. We're starting to round this out a little bit. Boy, you add some blue, green candles on here, and we could be back up to the races up into the 30s on this one. But careful on your sizings on this one. Okay, you got a $10,000 account. Wouldn't want any more than maybe 5-10 shares of this. And so that is Palantir. Last one, Peloton. This one's dipped big time, but over the last year, up 400%, but over the last month, down big time, 21%. Love that when I see this. Now, it's got a big valuation, but what I like about Peloton, okay, I know they sell these bikes and they're crazy expensive, but what I like is they got that $40 a month charge. It reminds me a little bit like Apple that overcharges for a phone. And just now, just over the last year or two, Apple's been getting into recurring payments on news and other services and music that they offer. Well, Peloton's been doing it from day one. And so I like that. They only have two products, a bike and a treadmill. So I think they're going to be able to expand their product line. And I just saw on their website that they cut down their delivery windows. I think it was at 4 to 8 weeks or 8 to 10 weeks. Now you can get one in, I think 5 to 6 weeks or something like that. So they cut down. It looks like they're starting to get that worked out a little bit. They had some manufacturing and some deliverability issues. Now, what I do like also is this stock chart. We've come way down. Okay, this stock had major support up here at $145 per share, and now it came all the way down to $94 per share, and now it's coming back. And so you like to see that. Now, it's kind of retraced here to 112. Don't mind that. We've got a low here, higher low, higher low, higher low. As long as you stay above 108 on this one, 109, that is a nice little resumption of what could be considered an uptrend. Now we've got this 50-day moving average turning big time negative, and so you don't like to see that. We'll see how that weighs on the stock as it potentially heads back up. But you also see here when we are under the 50-day moving average on this one, which is that green line, this stock tends to want to bounce back. We saw it back here. We saw it here. And I think potentially you might see it here as well. So a couple speculative plays, couple blue chips as well. We're seeing the market kind of go sideways, at least on the NASDAQ. The Dow Jones has been on absolute fire and doesn't really surprise me. And so it's really these NASDAQ names that have really had a big dip, and so I think you could potentially buy the dip on this one. We have a red candle today, not at all going to scare me. Tomorrow and Friday, Thursday and Friday, going to be, I wouldn't say critical, but something that I'll be watching very closely. If you have more sideways action, slightly upwards action, that could actually trigger more dip buying in my opinion, so we'll see what happens in the coming days. We'll be back again very soon with more videos. Good luck with your investments.